In this video, I'm going to show you 3 great stocks that you could use to write covered calls and generate real income. These aren't some canned 3 stocks that you'll see some kid in the basement talk about. These are real stocks that I use generating real profits. Stick around. I know you're going to like this one. Hey, welcome back, everyone. It is time for another red-hot covered call video. Well, you can already tell I'm a little feisty this morning. Over the past week, I've been watching a lot of those videos on YouTube. You've seen them, top 5 dividend stocks. These are my secret trading tips. Man, it just gets so frustrating when you have YouTubers generating content for content's sake so they could pocket that YouTube money, and they don't even know what they're talking about. I tell you, man, last week I actually commented on one of those top 3 dividend stocks, asking that person about a particular stock. And they replied back to me, I haven't bought any of the stocks that I talk about. So I think about the video I want to do this week, and I could talk to you about various trades I've made. I just made a Roku trade where I'm knocking down $1,400. But what I want to do today is share with you 3 stocks that I personally use. I have used these stocks. I have written covered calls. I have made profits. Hell, the very first one I used 10 times in a row to generate some of the biggest profits I've ever made. I want you to stick around for all 3 of those stocks because the third one is the juiciest one, and you'll spend the least amount of money to get in the game. But before we get there, if any of this interests you and you're intrigued, I want you to subscribe to the channel. It's right there and it's free. I do videos every week bringing you timely and relevant covered call trades. We talk about cash secure put trades as well. I show you my trades, we talk about them, so maybe you learn something. That's the idea here. I offer you up all the free tools to keep the numbers in front of you, and I do have a premium service, but I don't knock you over the head. You either want to be a part of it or you don't. Now, hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what we're talking about is this. 3 stocks that I have used over the years to generate consistent and steady covered call profits. Now, if you don't know what the covered call strategy is, the idea is this. We buy 100 shares of a stock. We're then going to give somebody the right, but not the obligation, to take those shares away from us for a price we pick, for a time frame we pick. They pay us a per share premium. I'll give you a quick example. Say I buy a stock for $50. I'm going to have to buy 100 shares. That's going to cost me $5,000. But I'm going to give somebody the right to take my shares away from me at a price I pick. So I bought the stock at $50. Let's say I give them the right to buy those shares from me at $55. They're going to buy my shares higher. Well, I'm going to give them only 30 days to do that. They're going to have to make that decision in 30 days. And for giving them that right and making me hold those 100 shares for those 30 days, they're going to pay me a per share premium. And let's say it's $1. Well, that's $1 times 100 shares. That's $100 in my wallet, guaranteed they can never take away. Now, if the stock goes higher, above 55, they pay me $55 a share or $5,500. I paid $50 per share, so I'm pocketing in this short 30-day window 6 points. Now, I want you to do the math. 6 points on a $50 investment. That's pretty good money for a 30-day cash-on-cash trade. Now, that's what we do here. I have done this for the past 3.5 years, showing you my trades, talking about them, so maybe you learn something. And when you look at the screen and you see all that money that I made, those are real bagged profits. There's no pie in the sky profits there. Those numbers represent when I put on a trade, and when the trade ends, I book it as bagged profits. And over the past 3 years, I've been able to generate over $180,000 using this strategy. Now look, I don't sell you any stock picking strategy or anything like that. I show you my trades, we talk about them, and you learn something. I'm from the old school, man. If you show me 3 or 4 times, I get it, and I'll be able to do it because I'm comfortable. That's the key here. Get comfortable with something, and you'll do it. All right, so I know somebody right now is posting in the comments that this is where the video begins. I want to say thank you because when I go into the comments of this video later and answer all of your questions like I do on every video, I love deleting that one. So many times people hit me up saying, stop with the blah blah. You don't like what I'm doing here? Go find another covered call channel that gives you timely and relevant trades, real trades that you can watch and learn from. Yeah, there's not many out there. And I'll tell you what, I try to bring you the energy and the passion and the excitement to get you motivated. I know there's a lot of you sitting on the bench, and I want to get you in the game. The only way you're going to have the kind of success any of us are having is you have to do it. Have to get your financial education, got to get in the game. Trust me, it's changed my financial life. So with that said, my first stock on this list is Bristol-Myers. And I'm going to tell you why I like Bristol-Myers. First of all, let me give you a little backstory of when and where I started investing in Bristol-Myers and writing covered calls. I think it was about 5 years ago, and I was doing my research on some swing trades. And I was using BIB, which is the 2X leveraged ETF for the pharmaceutical companies. Well, I own a couple pharmaceuticals, and in fact, I owned Bristol-Myers. I bought a couple hundred shares because somebody made a recommendation that I needed some great dividend payers in the portfolio. Well, over the years, I started doing my research on what Bristol-Myers does. And Bristol-Myers went from a legacy, mature pharmaceutical company to a growth pharmaceutical company when they came out with their chemotherapy pill, Opdivo. They started rocketing higher because Opdivo was going to add billions of dollars to the bottom line. Now, I was in Bristol-Myers and I was enjoying the stock rallying. And then I learned how to write covered calls. And I noticed that Bristol-Myers, for a pharmaceutical company, a mature pharmaceutical company, had some decent premiums. I mean, I could buy Bristol-Myers for $40. I could write a 30-day covered call and get about $1.25. You do the math on that. That's a decent 30-day cash-on-cash trade. I would buy Bristol-Myers, write that 30-day covered call, collect the $1.25 per share, and I noticed Bristol-Myers traded in a pattern. It would go up $3 and down $2, up $4 and down $3. It was that automatic. So what I would do is I would let Bristol-Myers get higher towards that resistance line at the top. I would write that 30-day covered call, collecting the $1.25, and Bristol-Myers would start to fall. And what I would do when Bristol-Myers started to fall away from that strike price, and that option that I got paid $1.25 would go from $1.25 to $1 to 80 cents to 50 cents, I would come back and buy the option back. So I got paid $1.25 for the option. I would come back in and buy it for pennies on the dollar. And I still own Bristol-Myers, for which I was going to hold anyway, and I would wait for the next cycle when Bristol-Myers found its bottom and would move higher. And when we use great pharmaceutical companies, and by the way, I'm not talking about one-hit wonders. I'm talking about Bristol-Myers, a company that has billions of dollars and gives billions of dollars away in dividends. It's one of those stocks that you could play in that range. I've talked about playing a range for years. Love using the Keltner channel because when I bring up the Keltner channel, which shows a stock's trading range, let me just show you the Keltner channel. This is a great Chuck Hughes indicator. If you know who Chuck Hughes is, he uses it all the time. And I absolutely love it because most of the time it's right. The Keltner channel shows a stock's trading range. So when a stock's trading near the top of the Keltner channel, it's perceived as being overvalued, meaning it's a little pricey. And there's a chance that it might come back. If a stock trades near the bottom of a Keltner channel, they think that's oversold. So you might get some buying because you'll get some value investors coming in. But that Keltner channel midline is what I love to look at. Because as you can see, this is a 5-year chart with Bristol-Myers. And there's that Keltner channel mid. And it's pretty bankable that every time it hits the Keltner channel bottom, you could buy and rally it to at least the mid. Now, sometimes it doesn't get to the bottom and it doesn't get to the top. That's just how it works. But for me, if I'm going to purchase a new stock, I want a low entry purchase. So what I'm going to do is I'm going to bring up that chart of that company, bring up the Keltner channel, and see if it's trading at the mid or under the mid, and see how it trades based on the Keltner channel mid. Now again, this is not guaranteed that you're going to make money. But this is one of the indicators, and in fact, I've done a video on this. I have 5 chart indicators that I use when I look to buy a new stock, and the Keltner channel mid is one of my favorites. Look over this 5 years. Every single time we get to the bottom of the Keltner channel, Bristol-Myers will rally to the mid or higher. Now again, it's not automatic. You could see right here, it didn't reach the mid. We as buyers want to make sure we're getting that low entry purchase. That's why I always love to use that midline, because I feel like that's where most of the trading's at. With that said, you could see Bristol-Myers pays a nice dividend. And I'll tell you what, for dividend investors, it pays some 3%. So it hits my portfolio because of the 3% dividend. And then when I look at those options, it would give you 30-day trades for which you can pick an out-of-the-money strike with stock appreciation. And you can make that juicy 3% wheelhouse number. Okay, so I'm getting a little long on the video. If I'm wearing on you, take a break. Pause the video, go take a break, come back, because I got two more that you're going to love. And one of them is Starbucks. I'm going to tell you why I love Starbucks and why I've loved using it in the past for great covered call income. Now, Starbucks' story is easy to understand. They sell a product, to be honest with you, in this virus pandemic, people can't live without. I've done a recent video where I talked about companies for which even in this pandemic, people will not give up their products. Remember I told you I was in the grocery store in the very beginning back in March 2020? And people are in there, they got their toilet paper under one arm, they got their food in the other, holding their Verizon iPhone. There are just some things people will not give up, man. And one of them is Starbucks. Starbucks has weathered the storm. And as you can see down here, this is a 5-year chart of Starbucks. First of all, they have one of the most recognized brand names on the planet. So we are clearly buying a great S&P type company. Now I know you're saying, John, this is not out of the box, right? You're not giving me anything that I can really chew on. Well, wait a second. I want you to hold up, because I'm going to show you a calculator where you can knock down on a 30-day trade. Let me tell you Starbucks' recent story that might interest you. Obviously, over the past 5 years, Starbucks has been a great trade. Goes up, goes down, right? It trades in that range. I bet you if we brought up the Keltner channel, it would play right in between, dancing up and down. Could have bought at the bottom of the Keltner channel, sold at the top. These are stocks that you want to use to write covered calls because they're bankable, right? And they're great companies, and they're one of those stocks that if you're down some 10 or 20%, it's really easy to explain to your better half why you're still holding it. And that's what's happened with Starbucks recently. The stock has rallied with the rest of the stock market over the past year, and as the virus pandemic happens, it crashes like all stocks have crashed. Now, its impact is a little bit more than others because it has all of those stores in China which closed. Well, it weathered the storm and it kept paying its dividend. Those are great signs, right? Well, it starts to rally, and then we get some great news. They're opening up stores in China, and we're going to be opening up here in the States. It's those stocks that are going to be opened up that are going to drive stock growth, right? It's just the nature of Wall Street. Wall Street sees the writing on the wall. The stock is literally down half of where it was before the crash. So chances are they're probably going to rally it back higher. What I want to show you here with Starbucks is we can buy a great company at $77 and we can pick a 30-day, you see it right there, 30-day covered call. We can sell an at the money, meaning we bought the stock at $77.10. We give somebody the right to take our shares away from us at $77.50, and they're going to pay us $4 a share. Now look, for my last stock, I'm going to give those juice traders a little bit of juice. Look, nobody on YouTube is going to talk about writing covered calls with 3x leveraged ETFs. And there's two reasons why. One, they probably don't know much about leveraged ETFs. And two, they probably think their viewers don't understand leveraged ETFs to sell premium. See, I know you're going to do your research. I know you're going to bang the YouTube videos and watch what a leveraged ETF is and all the negatives that come with it. There's a lot of positives, and I've profited from it. And I've done multiple videos on using leveraged ETFs. To be honest with you, it's the only way to really use leveraged ETFs effectively. You buy it, you write the covered call, man, you can knock down some 8 to 9% on a 30-day trade. I've done it. I've done the video. Just go back and search leveraged ETFs in my search window. Now, the reason I show you this is because I know some of you out there want some juice. And showing you stocks like Merck and Bristol-Myers and Starbucks isn't doing anything for you. So what I want to do is show you UPRO, but I'm not recommending UPRO. I'm going to talk about why I use UPRO and the kind of money I'm making with UPRO. But here's the deal. You have to promise me that you're going to do your research on what leveraged ETFs are before you even get close to these things. Because what I want to show you something is this. I want you to dial in right there. UPRO is the 3x leveraged ETF to the S&P 500. Now, I've explained why I love using leveraged ETFs of the indexes, because I'm playing a directional trade in the stock market. If I think the S&P 500 is at its bottom and I think it's going to go higher, well, to be honest with you, I could just buy the SPY just like everybody else does and write covered calls on it. But if I truly believe that the S&P 500 is going to go higher, then why don't I get a little juice? That's when I use UPRO, which is a leveraged ETF. Now, you have to understand, a leveraged ETF reboots every single day. And what happens is that costs you money. It is a depreciating asset in the long run. So do me that favor and make sure you know what you're doing. Now notice on Friday, UPRO traded up damn near 8%. Do you see the S&P 500 right there? It traded a little over 2.5%. That is about 3 times. And that's how this trades. When the S&P 500 is up 1%, UPRO is up 3%. And when the S&P 500 is down 1%, UPRO is down 3%. They move in sympathy with the index. See, they're not individual stocks. They mimic the index. So UPRO hits my radar because it's trading for like $20. And when I ran some covered call trades for UPRO, I was getting some 10% cash on cash, investing $2,000, picking up $3 and $4 in premium. And just last week, I bought UPRO at $34.85. I wrote the 36 out of the money covered call. And to be honest with you, when the stock was, when I wrote this covered call, it was trading almost at the money. I did a 30-day trade and they paid me $3.90 per share for that right. Somebody wants to buy my shares at 36. They're willing to pay me $3.90 per share. This turns out to be a 14.4% 30-day gain if my shares are taken away. And if you notice, UPRO is already trading over $36 a share. When I use leveraged ETFs, I love selling an at-the-money strike in an upward moving stock market, letting my shares be taken away because it takes away the risk, right? What's the risk of owning a leveraged ETF? The risk is if the stock market falls, it falls. And because it's leveraged, it falls some 3 times more. So when I buy the stock, I write the at-the-money strike, getting the max premium. And if I'm right, if my directional play is correct, the stock will go higher. I'll have my shares taken away. And in 30 days, they pay me $36. I keep the $3.90. This turns out to be a damn near 15% cash on cash trade. Now I'm going to leave it right there for this video. The reason I show you those leveraged ETF trades is because a lot of you want juice, and I want to give it to you because I've had experience with it. And when I show you my trades and we talk about them, you can get a little more comfortable understanding that ETF stock movement. Maybe it'll encourage you to do your research so you get comfortable with it and understand the risk. I know a lot of covered call guru and YouTube video makers won't even talk about leveraged ETFs because 1, they don't know much about them, and 2, they've never traded them. But with that said, we always must do our due diligence, and we must understand when we put real hard-earned money to work, you got to be accountable to it and understand your risks. Now I'm going to leave it right there for this video. If you like what you heard, I want you to subscribe to the channel. And hey, look, if you like this video, bang that like button. Go over to Facebook. Facebook is our off YouTube discussion where we talk about things like this, and I post up those trades that I talked about today. You want to be a part of it. Hey, look, I want you to be safe, be healthy, and most important, be lucky. Until next time, may all your covered calls be profitable.